What's up, traders? Today I'm going to be talking about something that is a really interesting instance in the foreign exchange market. You guys have heard of broker manipulation, you've heard of market manipulation, you've heard of the big banks and smart money and institutional. I'm sure that you've heard of these concepts. This idea is nothing new. It's the idea that there's smart money and there is dumb money, and dumb money happens to be most of retail traders. You've probably heard the stat that 90, 95, I would even argue maybe 97%, maybe plus. That's just opinion, but there's fact out there that brokers have released that most of their traders, 75, 85, I've heard 75 to 95% of traders lose money. Why is that? Is it because these traders just have no idea what they're doing? Maybe. Is it a combination of that plus some market manipulation? Possibly as well. As retail traders, we are the last people to know about a lot of different information. News usually gets processed much quicker by high frequency trading systems, different algorithms out there trading the markets, and all that sort of stuff kind of comes into play when we talk about markets. But today I want to talk to you guys about one particular instance in the foreign exchange market that is absolutely crazy. It's one of the craziest market moves and one of possibly the sketchiest, most questionable market manipulation tactics I've ever seen in my experience in trading. So today we're actually going to be talking about the Euro-Swissy crash. I believe this happened in 2015. Now I've got a chart pulled up here for a reason, so bear with me here. We're talking about specifically there was a time where the Swiss National Bank came out and said the Euro-Swiss currency pair, we are going to keep it locked at a conversion or at a rate of 1.2, I believe it was. So if we actually scroll back here, watch this. This is crazy. So if we scroll back here just a little bit, what you'll notice is things are chugging along and we go back historical data, and then all of a sudden, bam, there is this massive, disgusting red candle on the chart that is huge. It is massive. It is so big. Which it's so big, in fact, that the price action before of it just looks like a straight line. It's so small in comparison to this one big move. So what actually happened here, and what can we learn from this? Because this, in my mind, is probably the best example of market manipulation or retail traders absolutely getting disgustingly destroyed by smart money institutional traders. So what happened? Well, again, the Swiss National Bank came out here before this big, horrible, life-ending, horrible, red candle here. Before that, they actually came out and said, okay, we are not going to let the conversion rate, we are going to hold price at this 1.2 level, okay? So if we actually get a horizontal line, what I'm going to do here is I'm going to put a horizontal line right around 1.2. So the Swiss National Bank said we don't want it to drop any further than that. We are going to hold prices at this rate. Okay, and so what that meant for a lot of retail traders who heard that, during this time, retail traders, you could go back in time and see the retail client sentiment. Some of those brokers, they offer a chance for you to see what clients are holding, right? Well, during this time, we actually saw that traders were like 90% long on this trade, because if you know that the bottom is in here, if you know that the Swiss National Bank has said, hey, we're not going to let price go underneath this level, then it can only go up, right? And that's where they got everybody. This is possibly the sketchiest thing, again, like I've said, this is the sketchiest thing I've ever seen in Forex. So you've got this bank who says, okay, we're not going to let it drop any past here. And then all of a sudden, guess what happens? Swiss National Bank comes out and says, oops, never mind. And then we see this crazy candle. It literally, like, I have to scroll for like 30 seconds to get to the bottom of that candle. Absolutely massive. And this is not a 1 hour chart. This is not like a quick move. This was a daily bar. A daily bar where we dropped from start to finish somewhere in the realm of 2,300 pips in minutes. This is one of the craziest market movements I've ever seen. And again, it all came back to that thing. In fact, a lot of brokers even shut down because of this. A lot of big money managers and brokers and services, they got absolutely wiped out because there was such a drastic move. Any sort of leveraged group or fund or something, there were tons of not just retail traders, but even brokerages who shut down, who got absolutely annihilated by this move because of, again, the manipulation here. Somebody knew, and this is my opinion, somebody knew that this was going to happen beforehand, and I can almost certainly guarantee that there were some really, really good times for the people who were short here. I'm sure that there was a lot of smart money or people who knew what was going to likely happen, because when everybody on the retail side of things is doing one thing, it can be a really, really dangerous thing. And in some cases like this one, it can even spell disaster for Forex retail traders. So what can we learn from this? Well, I think that one thing to learn from this is that understand that in markets, nothing is impossible. Markets do not have to do anything. There's no rule book that says, well, markets can't go up more than 10 days in a row. They certainly can. There's nothing to say that if a bank says, we're going to hold this level, there's no guarantee that that is actually going to be the case. They can take back anything. This is the market. This is a place where people are fighting to make money, and it's one of the most competitive places in the world to make money. And so I think as retail traders, we have to be very, very careful that we don't buy into any sort of guarantees or too good to be true things. If you see a guarantee or a too good to be true or big statements like this, do not be the person who was buying this, trying to buy it and make a bunch of money because there was a guarantee it was going to go up. There's no such thing in markets. There's no such thing as a guaranteed profit. This is a competitive industry where everybody's trying to make money, and if you think that you're just going to be able to be like, I'm just going to buy it because they said it can't go lower, that's dangerous. You are literally acting with the crowd. And being with the crowd can be an incredibly dangerous thing. Now, one more thing to add here, if you had a stop loss on this trade, because I know some people said, well, what if I've had people talk to me about this, say, well, what if you just had a stop loss? Then it wouldn't kill you, right? If you had a stop loss on this trade, you did not get filled anywhere near where you wanted to. Let's say the blue line, you decide, I'm gonna be snarky, I'm gonna be smart and buy here at the 1.2 level, because again, there's no risk on the trade, it can't go down. So it might as well only go up. Well, if you had taken that trade and you put a stop here, let's say do something kind of rational here and go for a decent trade here. If you had actually put a target there and a stop somewhere here, right? Well, let's say that you risked like 2% of your account. What ended up happening here for a lot of people, and this is not even hypothetical, this is factual, a lot of people were doing this. Tons of people. In fact, 80-90%, I can't remember the number, but a lot of retail traders heavily were buying this thing thinking that it couldn't go any lower. And guess what happened? Your stop loss did not get filled here. And it didn't even get filled here. It didn't get filled here, didn't get filled here, didn't get filled here, and we can repeat the endless scrolling, and look at this. This is what really happened. People got filled on their stops massively further than they had expected. People were wiped out by this. Not only were they losing their money, not only were they taking a big loss, a lot of people actually went negative on this particular movement, right? So they ended up owing way more money to the broker than they even had in their account. If you had $2,000 in this account, you could have ended up owing $5,000 to the broker extra on top of your account. And this is why it is so dangerous to trade, in my opinion, with high leverage at any given time, because the market can do this again. It could happen in a week from now. Wouldn't it be crazy if 1 week from now it actually happened? It wouldn't be good, but it could happen. That's what I'm saying, is you have to almost expect the unexpected in markets, because markets are going to do crazy things. So I think that one thing that we can learn here, in my opinion, is to never put massive lot sizes on your account because of something drastic, something crazy happening like this again in the future. Don't get caught out. So this is why I like to use small positions, and if you're going to use a stop, understand that this sort of thing can happen, right? So it's not that stop losses are useless, but you have to understand that using a stop loss, there is no broker that, very few brokers are going to guarantee that you get filled just where you want to, because they know this sort of thing can happen. So if they know this thing can happen, they're not going to guarantee you stops, because if they guarantee you stops, that means they have to take your trade here when they know very well that that could leave them holding positions way down here. And they're not going to do that, right? So brokers are a business. They don't want to put themselves at massive risk. They want to provide liquidity, and that's it. That's their business. They don't want to speculate on price movements. So when you're talking about a move like this, again, that's why brokers very rarely actually, guarantee stops. There's no guarantee that your stop loss gets hit and filled right where you want it. You could get hit right here with a stop and actually get filled down here, okay? That is entirely possible, and that's why this business is so dangerous if you don't know what you're doing and if you're highly leveraged. That's why, in my opinion, I stick away from leverage. I don't use a lot of it in my own trading. And then, you always get the comments, well, Nick, how am I gonna make a lot of money if I don't leverage my account? Ding, ding, ding. That is the magical reality of Forex, is that making a lot of money from this in a very short period of time without large amounts of capital, to me, is not realistic. To me, the way to actually make money and to do this for the long term is to go slow and steady, using proper lot sizes for your account, using small, steady gains, and building accounts over time. Guys, I hope this was helpful to you. Maybe this is a lesson that, hopefully it scares you a little bit, because it scares me. This is something that I kind of remind myself with when I take a position, is like, you know what? Know that anything can happen. This is a crazy, crazy place. This can happen in the stock market, currency market. This stuff happens. Let me know what you guys think down below in the comments. Thanks so much for watching, and have a great rest of your day.